Well, welcome back to Finance Uncut. On today's episode, $10,000 gold and $500 silver. And coming in from Kitco News, gold price at 10,000, silver at 500, due to a decade of shortage, says Goering and Rosenzweig. Now, who is Goering and Rosenzweig? Well, Goering and Rosenzweig are natural resource investors. They're a research firm, also have their own mutual fund. And these are two gentlemen that I follow very closely to get their analysis and research done on the natural resource sector. In fact, there's probably three people that I go to. That's these guys, Chris McIntosh from Capital Exploits, and Art Berman, who really is the energy and oil guru out there. So what do Goering and Rosenzweig, what's their strategy, their philosophy? Well, they're contrarian value investors. So they take a contrarian value approach to commodities and natural resource investing. So with their contrarian value approach, we believe the best way to find value in global commodity and natural resource markets is when prices are depressed, investors are discouraged, and financial measurements are cheap. Pretty much explains the gold and silver market right there, doesn't it? So their philosophy implements a research-driven approach in an attempt to generate superior risk-adjusted investment returns in the commodity and natural resource sector. As I said before, they use a contrarian value approach, which is why I like them. It very much aligns with my thinking. So they use a fundamental research-driven value investing approach. We believe the best time to find value in the natural resource sector is when a commodity is largely out of favor with investors, prices are depressed, and valuations are low. I like doing that too, and then I just sprinkle a bit of time on top, patience, and it all seems to work out most of the time. Typically, natural resource firms will have little to no profitability at these times. So while on a PE, so price to earnings, or a price to cash flow basis, these securities may appear to be expensive. However, they represent value based upon either price to book or based upon a NAV model, using our differentiated long-term commodity price assumptions, and they use a top-down and also a bottoms-up analysis as well. So that's who these guys are. So they go on and say this will be a decade of shortage defined by high inflation and a failed attempt to raise rates. Yeah, I probably agree with that. Perfect combo to trigger a massive rally in gold, said Goering and Rosenzweig Associates managing partner Lee Goering. Next year, inflation could already be pushing 9%, and it could get a lot worse, Goering told Kitco News in an interview. We're getting closer to the explosion of gold prices to the upside. I'm a big believer that inflation is not going away. It's going to continue to be a problem. We could be looking at a black swan event in inflation. It could be an oil shock, natural gas shock, or agricultural shock, Goering said. Now, I am going to do another video where I'm going to share something that Art Berman has been talking about recently. And I went and did a bit of research based on what Art said. And holy smokes, he is 100% right. So I've just learnt something in the last week or so, and it's around inflation. So absolutely, we are heading for a decade of very high inflation, folks. Very high inflation, and therefore, and the thing is, I'll share. I might touch on this later in this video, but I'm definitely going to share it in this other video. Central banks, they won't be able to control it this time. This time, inflation is being caused by some different forces than the 1970s. So, yeah, a lot of it is out of their hands. So, anyway, let's read on. Federal Reserve Chair Jerome Powell already shocked the markets this week by dropping the phrase that inflation is transitory and stating that the US Central Bank will be discussing accelerating the pace of tapering at the upcoming December meeting. An inflationary black swan event could kickstart the inflationary psychology, which has been missing despite annual US inflation running hot at 6.2%. It is going to force the Fed to raise rates. The central bank will start, but that will create such havoc that the Fed will have to stop. In response, gold will pull back first, but that will be the final retreat before the massive gold bull market Goering described. There are too many similarities between now and the late 1960s and early 1970s, and they cannot be ignored. So there are similarities, but there are also many differences as well, which, I'll touch on shortly. Back then, inflation was going up about 5 to 6% per year, the same as now. And then in 1973, there was the Black Swan event, the oil embargo. Oil went from $4 a barrel to $15 a barrel literally overnight. And that triggered a huge surge of inflationary psychology. And the Fed raised rates aggressively. Gold spent the next 2 years going down, bottoming in 1975, Goering said. This time around, however, the Fed will have to give up on raising rates because it will be too painful for everyone. Well, with the debt bubble that we've got, it certainly will be. And that would be a perfect scenario for gold, Goering added. Once the precious metal bottoms from the Fed's tightening action, it will begin its massive bull market. When Fed Chair Jerome Powell began his first term, he tried to raise rates, which backfired in the Treasury market. That's why I think that Powell will have to give up on raising rates, just like he did in October 2018. Once he gives it up, the great bull market in gold starts, Goering pointed out. $10,000 gold and $500 silver. How big of a bull market will it be? Goering is expecting gold to reach $10,000 an ounce by the end of the decade, and for silver to eventually catch up and trade around $500 an ounce. By 2028, gold could be over $10,000. If gold is over $10,000 and we go back to the 20-to-1 gold-silver ratio, that's $500 silver, he said. It will be the decade of shortages and everyone's going to get poorer except for the people that own physical gold and silver. Well, here's the thing. If we do get $10,000 gold just based on, what happens in the market, so no type of actual reset, if there's a massive bull market that does push gold up to $10,000 by 2028, then there'll be a mad rush into silver, especially when gold gets a bit pricey. People will start pouring into silver, and silver being such a small market, and we'll have a look at that in a second. Then that gold silver ratio could go to 20 to 1. Now you guys know that I think it'll probably go to around 30 or 40 to 1, but 20 to 1, if this is a genuine bull market like this, absolutely it could go to 20 to 1. Silver is another quintessential inflationary metal to buy and hold during the next decade. I'm convinced that in this bull market, there's going to be another corner attempted at the silver market, Goering said. Well, yeah. You guys will find out next week. I've got a video that's entitled "The Real Silver Squeeze," so stay tuned for that. You'll be quite surprised at that. Inflation will get a lot worse during this decade of shortages, absolutely, and the underinvestment in the resource sector will play a big role, 100%. And it's all got to do with this whole green revolution, this insane, climate. I can't even say the words. It's just absolutely insane. And so many people have no idea how this is going to work out, have no understanding how things are made and what minerals and metals and things are made in our everyday goods and services, goods that we use, and t-shirts and all the things in our kitchen, appliances. It's unbelievable. I can't believe we're living in such a brain dead society at the moment. I'm sorry to say that. I don't mean to be mean towards anyone. I talk to people and wow, it's like people have lost that rational, critical thinking, that ability to hear something that may go against their, beliefs or something. It's like a religion. And anyway, it's so difficult. So I just try to share information with you guys because you guys are obviously on this channel and watching a lot of other finance and economic channels and investment channels. because you're open to learning, you're open to hearing different ideas and opinions, and there's no one who's 100% right all the time, and so we all learn from each other. But anyway, when we look back on this decade and ask what happened, it's going to be looked upon as a decade shortage. It's going to be a shortage of everything. Over the last 10 years, we've radically underinvested in our resource bases relative to demand. Look at what's happening with Exxon and Chevron and the ESG concerns. That whole ESG thing is another big problem. And guys, I'm going to share a report that these guys have done. Goering and Rosenzweig have done a report on the whole energy sector, and it's brilliant. I'll share that in a video coming up soon, and I'll put a link to their report. You guys can read it in your own time, but yeah, it just makes sense. They're not talking about replacing their resource base, Goering stated. That's right. This underinvestment in the resource sector will manifest itself, and that is going to be highly inflationary. The Goering and Rosenzweig managing partner said, this year inflation accelerated from under 3% to over 6%. At some point in 2022, we could approach 9%. Well, what do we got now? Is it 6.8, 6.9%? I saw the other day. Unbelievable. Well, it's not unbelievable. It's believable. And we know that's the government numbers. So we know, take that with a grain of salt. And what? Food prices, I think, what they quote food prices at, like, I can't remember what it was, but it was definitely understated. And then you've got, owner's equivalent rent that they use, and housing makes up, what is it, 25% or 30% of the CPI numbers in the US. And what they say the owner's equivalent rent was 3.8% or something, when really rent has gone up across the country at 12.8%, and it makes up such a large chunk of the CPI number, yet CPI still came out at 6.8, 6.9%. So yeah, think about that, guys. And the one key metric to watch is the bond market, which has so far largely dismissed the rising price pressures. And yeah, look, watch the bond market, but, and I do watch the bond market, but man, can we trust it when we've got so much central bank manipulation in the bond market? And I know there's some smart people that I follow that disagree with that thesis, but there's many smart people I do follow that absolutely say that you can't look at the bond market. You got central banks distorting the bond market with their massive intervention in the bond market. I mean, I lean that way, but yeah, no, look, definitely keep an eye on the bond market, but wow, just be careful, I think. We have inflation now, but we don't have inflation psychology. Well, that's true, because what was it? The Bank of America survey had something like close to 70% of investors still believe the central bank, the Fed's narrative that inflation is transitory. So they didn't have that inflation psychology, but they will. And that's what the bond market is saying too. However, what happens if the bond market changes its mind? We could see massive panic selling. And that's going to be a big problem for equities in 2022. The bond market could finally incorporate inflationary expectations Goering described. And that's what I've been saying on this channel for a little while now, that I can see asset price falls. If people do wake up to the whole inflation is no longer transitory, in the sense that the Fed have been pushing, everything is transitory. There's nothing that's permanent. Even our lives are transitory. So yeah, this could be a big problem for asset prices. So for your speculative type investments, so your cryptos, your stocks, and property, probably to a lesser degree. During the last month of 2021, gold is still in its corrective phase after hitting new record highs last year, but the long-term investors have been using this opportunity to buy. Gold hasn't been the place to be for performance reasons this year, and I think that performance discrepancy will continue for another 6 months. But for people that are looking to buy gold for the long term, they are buying now. Gold stocks too. They are the cheapest they've ever been. Yeah, absolutely, and that's why I'm pretty loaded up in the physical metal, both gold and silver. Although occasionally when silver in particular gets smashed down on my way home, I do pop into my local bullion dealer. They love seeing me in there, and I buy a little bit more with just some of my leftover fiat currency. But I'm predominantly pouring my capital into the miners and explorers, as I've mentioned on many videos. And that's because I believe they are super cheap and they have that leverage of the metal. I'm bullish the metal. And so, and the market is so small. At the moment, we've got investors that are holding about a third less than what they usually hold, according to the mean, as a percentage of their investment portfolio. So there is so much upside for me there, and so much free cash flow at the moment. Another big winner for next year will be the agricultural sector, especially fertilizer stocks, according to Goering. Well, speaking of fertilizers, we've got a shortage of urea, which is used in fertilizers, and AdBlue, which here in Australia is an ingredient or an additive into diesel. And apparently we've got about a month, 6 weeks left of AdBlue or urea. So we could have trucks not able to transport goods and food. What happens if we have a shortage of fertilizer due to this? Because most of our product of urea comes from China, and they're stopping exporting to try to bring down the cost of fertilizers. So this is a huge problem. One of the reasons why I've been bullish agriculture for some time, and I had Benji, young Benji, who works for me as an analyst, do some work for me earlier this year on this specific sector so that I could get some exposure to this sector, is because it produces something that we need, that humanity needs. And I see the way energy prices, I see the move to this green revolution, so to speak. And I believe there's going to be food shortages and food prices and agricultural in general, things related to it. But the demand is still going to be there. We still need to eat. So there's going to be less supply, but demand is going to continue to increase, in my opinion. So that's why I looked at this sector earlier in the year. And now we here in Australia, we are faced with a genuine issue around urea. So what's he saying here? So that the only thing that's done better than fertilizer prices in 2021 has been natural gas price. There are improving fundamentals in global fertilizer markets. Energy fertilizer is very energy intensive. China has already curtailed fertilizer production. There we go. Increased demand in light of supply side constraints could make these stocks the super winners of 2022, he added. So absolutely. And look, in another video coming up soon, probably be out next week, I'm doing a video on my projections and what I think 2022 is going to look like, and what sectors and industries that I'm investing in, positioning for, and which ones I think are going to outperform. Also, I think we're going to see CPI, a CPI number hit double digits next year. Now, I can also see CPI next year falling to where it has been. So just not rising as fast as it is. Still rising, but not as fast. But then I think we're going to get a big So if we do get that market correction, I expect government and central banks to just go bang and helicopter money, or just fully implement MMT, or universal basic income or something. And I don't know. We'll see how the midterms in the US play out as well. But that could really push that CPI number, the reported CPI number, to double digits, and that's going to be very painful. So stay tuned for that. So it'll be out next week, and that's my kind of projections for 2022. You'll be quite surprised, and I'm going to share some charts, like I said, some information from Art Berman, which I hadn't looked at before, and wow, the correlation is unbelievable, and the correlation goes back 60, 70 years. So it's not a correlation over a 3-year period or a 1-year period or a 5-year period or something. So anyway, stay tuned for that one, and also stay tuned next week. I will have the real silver squeeze. So there's a couple of really interesting things boiling along that you'll want to see. So stay tuned for that next week. Anyway, guys, love to see your thoughts and opinions in the comments below. Do you think we'll see gold at $10,000 by the end of this decade and $500 silver? I've been pretty clear on this channel where I think gold is going in the next little while, and where I think the silver price is going as well. So I've been very clear about that, and you guys can hold me to account on that. Anyway, guys, take care. If you like this video, please hit that like button. Really do appreciate it. I'll see you again on another episode of Finance Uncut.